I'm going to walk you through 3 real trades I took recently: the full analysis, the entry, the management, and the exit. This is what executing a process actually looks like, so let's get into it. Before I touch a chart on the day I'm trading, I need to know where price is coming from and where is it likely going to. So the first thing I'm always looking at is the higher time frame, and here I'm looking for my bias. On this day, we can see that we have a fair value gap, and we also have a C2 closure. So when I see a swing formation inside the point of interest, I can already say that my bias is bearish. We also have liquidity resting below, so I'm interested in trading this to the downside. I am not guessing here. The market showed me where it had already been, this fair value gap, and where it still needs to go, these liquidities below. I'm not deciding what I want to happen. I am just reading what the market is already telling me. We have the point of interest, we have a reversal signature, so I'm gonna be bearish for the session. Now I come down to the middle time frame to look for a structure that confirms what I'm seeing on the higher time frame. So what I need here is evidence that the market is actually moving in the direction of my bias. So what I want to see here is a structure that aligns with the bearish bias. And what we can see here, pretty much the same thing. We have the same point of interest and we have a swing formation on that point of interest. And this swing formation is also confirmed by this CIST, the change in state of delivery. We have the point of interest, we have the swing formation, we have the CIST, so this is a bearish structure. This is what I'm looking for. I have my confirmation that the momentum aligns with the higher time frame rate. So in this specific case, I'm interested to trade this candle to the downside. Now I come down to the lower time frame, and this is where I look for my entries. And this is where most traders get impatient because the higher time frame said sell, the middle time frame confirmed the sell, and now they just want to get in, but you have to wait for a proper entry sequence. So in this case here, we can see that we have the CIST, which is again confirming the move lower, and we have a fair value gap right here that's being tested. We need to wait for the rejection of the fair value gap. What I want to see here is price to close below the series of up-close candles that created the new high. So we don't have it yet, and now we have the closure. So once I'm seeing the closure, I can place my entry, stop at the highs, targeting to our minimum, and you can see that we get there. And here, I am not adjusting my stop. I am not moving the target because I got nervous. I'm not closing early because these 2 candles went against me. I had a plan before I got in and I just followed it. Here we are on the second trade. The framework is exactly the same. The setup is a little bit different, but the concepts we're gonna use are exactly the same. So on this day, what I can see is that we have an opening gap right here that's being tested. What I can also see is that we have a swing formation on this point of interest, on this gap. So in this case, I'm interested in trading the reversal or the retracement. I have some targets up here, but they are very far away. So in this case, I'm not actually targeting these highs right here. I usually use the equilibrium of the range to see where the midpoint is and try to trade to that point, to that level. So we can find a closer target and a higher probability target. Now, the key thing I want you to notice here is that my bias on this day was the opposite of trade 1. And this is fine. I don't have a directional opinion I am married to. I'm just reading what the chart is showing me and I'm trying to build a plan around it. So let's go to the middle time frame to see what we have. And here we can see the same thing as before. We have the point of interest, we have the swing formation, and we have the CIST confirming the move. So this structure is aligning with my bullish bias. And in this case, I'm interested in trading the next candle to the upside. So let's go down to the lower time frame and look for the entry. Here on the lower time frame, again, we have the CIST confirming the move higher. We have the FVG right here that's being tested. So now we want to see price rejecting and confirming the move again. So we want to see price closing above this line, which is the series of down close candles that created the new low. So once price closes above this line, I place my entry. All right, so here we have our closure above. We can place the entry, stop at the lows, targeting to our minimum. And let's see. We get that. You can see we have 2 trades, 2 different directions, But the process is exactly the same, and that's the point. The framework doesn't care which way the market is going. It works in both directions because it's based on what the market is actually doing. And the same thing applies for the time frames. Either you want to scalp on the 1 minute or to trade on the 50 minutes. The system works because the framework is exactly the same, whether you want to scalp or whether you want to swing. The thought process remains the same. Before I get into this last trade, if you have been watching this series and the concepts are starting to make sense, but for some reason you still cannot execute them consistently when there is real money on the line, this is the exact thing I work on with traders I work with directly. If that sounds like where you are right now, DM me the word mentor on Instagram at Sierra Trades, and I'll personally have a conversation with you to see if we are a fit to work together. Alright. Last trade. Okay, let's get into this third trade, and this one I want to show you because the higher time frame read is the same kind of process and same goes for the entry, but what happened on the middle time frame was different. So let's start with the higher time frame. What I can see here is that we have a clear bullish bias. You see that we are trading above the previous candle high and we have a target here above. We have a liquidity resting above and it's very close, so price most likely is gonna reach that. My bias for the session here is bullish. At this level, nothing changes. We are just using the same simple concepts. Now, most of you have probably heard of SMT divergences, and if you haven't, here's the short version. So an SMT is when two correlated assets are moving together, but then at some point, one of them diverges. In a bullish setup, one asset is printing a lower low, and the other asset is printing a higher low. And this divergence is telling you something. It tells you that the selling pressure behind that lower low is not real, because if it were, both assets would be confirming it. One of them is being manipulated, and that's your signal. This is a standard SMT divergence, and on its own it's already a meaningful piece of confluence, but alone is never enough. What I'm looking for here, it's a double stage SMT. So we can see that we have an SMT right here with this low. As you can see, this asset is trading higher and the correlated asset is trading lower right here. One asset is creating higher lows and the other asset is creating lower lows. But as I said before, one SMT is not enough. So we need another SMT. And here we have the other SMT. One asset is trading lower and the other asset is trading higher. And this is our double stage SMT. And this alone, it's a valid structure. The reason I'm showing this is not to add complexity for the sake of it. It's to show you that the middle time frame, the confirmation doesn't always look the same. Sometimes the market gives you something more layered, and if you know what you're looking for, actually it gives you more confidence going into the entry. And in my experience, these kind of setups are the most powerful setups I have ever seen. They might look complex at first, but once you see them, you really can't unsee them. And it gets very, very easy to spot these kind of setups. Now, going to the lower time frame here, the entry is actually simpler than the previous examples. Because here, the only thing I'm looking for is a CISC that confirms this double stage SMT. I need to see price closing above the series of down close candles that creating the new low, in this case this one. And once price closes above, I can place my entry. For example, here, I can place my entry here, stop at the lows, targeting 2R. And as you can see, we get to the target. In this example, the middle time frame was different, but the bias and the entry were really not. We are just using the same concepts on different time frames. And that's what I want you to take from this. The framework is consistent, but the market will not always give you the same structure to confirm your bias. But everything else is the same. The process is always the same. And that's really what this whole series comes down to. You don't need to know everything. You need to learn a few concepts, master them, and apply them. Because at the end of the day, you're just repeating the same process, the same thought process on different time frames. It doesn't matter if you're using the 1 minute for your entries or the 1 hour. The logic is always the same. The steps are always the same. And what makes this system so powerful is that it's mechanical. You have specific rules, and either the rules are met or they are not. And that's it. You don't need an opinion. You don't need to guess. You just come to the charts, you go through your checklist. Is the bias there? Is the structure there? Is the entry trigger there? And if everything lines up, you execute. If it doesn't, you wait. There is no room for emotions in this process because the process doesn't ask you how you feel. It just asks you what you see. If you got to this point in the video, I want you to hear this. If you have been trading for a while, you understand the concepts, maybe you have even passed the funded challenge, but something keeps breaking down when real money is involved, that is not a strategy problem. You have an execution problem. And it's the exact thing I work on with a small group of traders I work with personally. It's not a course, it's not a Signal group, it's not a massive Discord. It's just me working closely with a small number of people on building a process they can actually follow based on their own situation. I only take on a small number of traders at a time because I review journals, I answer questions personally, and take calls with everyone I work with. If this sounds like something you have been missing, DM me the word mentor on Instagram at Sierra Trades, and I will personally have a conversation with you to see if working together makes sense for where you are right now. If not, no worries at all. Hopefully you found this video helpful. I'll see you in the next one.